Jean, you make the point that it is an effective way to balance China as a trade to strengthen the CNY exchange rate. How likely is China to do this?
Well, at least we can see the CNY plays very differently this time from what they did in 2018. Back in 2018, CNY depreciated about 3/4 of tariff rate. If you recall what happened in 2018, the headline tariff was 20%, weighted average was 18, and the CNY depreciated 14% through 2018. That's about 3/4 of a tariff rate. But this time different. We're already almost 2 weeks after Liberation Day, and the CNY was still at a 7.3. And moreover, you just announced a few minutes ago, even though the spot is 7.3, the money fixing announced by the PBOC was 7.22, which means PBOC is still setting a fixing that is stronger than the spot rate. So, of course, the market will react, pushing CNY a bit weaker in response to the tariff. But so far, we do not see PBOC is kicking CNY weaker as a retaliation tool. On the contrary, there are some incentives for Beijing to keep the CNY steady for a few reasons. First, when you weaken CNY, then you would absorb the price shock to the U.S. consumers. If you keep the CNY steady, then and also at the same time, Chinese exporter won't have any room to cut the export price. Then in this case, all the price shock of the tariff will be passed on to the U.S. consumers. Now, secondly, China is facing a severe problem of a capital outflow because dollar yield is so much higher than the CNY yield. If you look at 10 years, dollar 10 years 4.5, CNY 10 years 1.6. That's almost 300 basis points higher. So both foreigners and Chinese have incentive to move CNY into dollar asset and earn 3% more. So they're taking the money out of country. So then CNY depreciation would exacerbate the capital outflow issue. And also, a couple percentage points CNY depreciation will not offset a 145 tariff rate and help the export much. So in this case, the cost of CNY depreciation could be higher than the benefit of CNY depreciation.
I just want to bring everybody up to speed on some comments coming through from the Customs Department in China. They say at present, China's exports are facing a complex and severe external situation, but the sky will not fall. China is actively building a diversified market, deepening cooperation with all parties in the supply chain. Now, this as we, of course, are looking at President Xi embarking on an ASEAN tour. He'll start, of course, in Vietnam, move on to Malaysia and Cambodia. What do you make of this?
You see, that's another reason China shouldn't using CNY as a retaliation tool. So if you weaken CNY, yes, you offset a little bit of US 145% of tariff, but at the same time, weak CNY will push Chinese export to all the other markets, which is unfair to Europeans and also the other Asian and even African countries. And so what China need to do is instead of weakening CNY as a retaliation tool, China should launch a pretty robust domestic stimulus package so that it can offset the external negative shock from the tariff at the same time to boost the imports to balance the trade. The right way to balance trade is not to stop China's export, which is unfair to the Chinese business and the factories who work so hard. So the right way to balance the trade is to boost the China demand, both in terms of consumption and also in terms of investment, and boost the imports from the United States, from European Unions, and also from Southeast Asian countries.